Okay, and we are live. Happy Monday, start of the week with a new bullshit on the geopolitical front to start our day. Red, Roy, how's it going?
It's one of those April days, but I think when we get into June, we'll be, wait a minute, it's July. What happened?
Yeah,
I thought all this Iran stuff was behind us. And of course, I reduced my position in VG to buy more CoreWeave, which now feels like a terrible mistake. But how are you doing?
I'm doing good. Glad to be here. I got a monster right over here.
Ooh, that's my favorite one. That's a good one.
I know,
Better than this. This one's good though.
and uh, and it's gonna be a great time. This is the high point of my day after being in meetings all day. um, Getting to talk markets with you guys. So, yes, we are late. That is my fault. But welcome, everybody. Thank you, iPhone iCloud, for being a new member. And what do we talk about today, Roy?
I think maybe we can start off, even though it's not in the title. I don't know if you saw a few days ago where Apple sued OpenAI for trade secrets and privacy violations. If there's going to be a legal battle there, and neither of us are Apple shareholders, but that's probably a good place to start, just because OpenAI is one of several. I don't think they're the only linchpin in the AI trade. So it has a lot of potential ramifications, and we should probably talk about that a little bit. I I was realizing when I was going through my feed and looking at the news that we'd share, I'm like, oh man, I didn't even like link that to you or anything. But let me first address what this is, and then we'll talk about it as well. This was Seeking Alpha, and they had a good just synopsis on it. So Apple has filed. Well, let me pull it up. Apple has filed a major lawsuit against OpenAI alleging theft of proprietary metal finishing trade secrets. And of course, this goes back to them initially hiring Johnny Ives, who was instrumental in the iPhone design. We know that they've hired some other people as well from Apple. It'd be interesting to see what this comes out on against this, but there's a little bit more too. So, consequences, analysts are warning that this escalating legal battle could delay OpenAI's on incoming hardware ambitions and seriously weaken their existing iOS ChatGPT integration partnership. Financials is really where the big stake is here. So Apple enters a high stake courtroom fight with massive operational resources anchored by a massive amount, 451 billion in total revenue and a strong diluted EPS of 825. And so we'll have to see actually how this plays out. Did you? I don't know if you saw this right here. It's kind of humorous as far as like some of the allegations and the quotes that have been found in this. Have you seen this, Tevis?
Yeah, I was going to throw something up that was similar, but yeah, you can drive.
Okay, so yeah, this is a trade secret lawsuit, and there's a 41-page complaint that they actually filed. I've not actually looked at the original complaint. I probably should, but I'm not an Apple shareholder. But it still does have ramifications with the AI trade. So normalized and exemplified by leadership, and so it's well, okay, no, this is better. Rotten to its core, and so Apple, of course, is using fruit analogies in there. But they basically, it's what they're wanting to stress right here is OpenAI is developing was built basically with Apple's trade secrets. Um, LOL, I found out I can access network storage. So funny. I still have another computer. It's there's a lot of so this is one of those former Apple employees, Cheng Liu, and so this is I don't know if this is necessarily a smoking gun. I'll leave that to the lawyers in the courtroom scene, but
Wow.
there's definitely correspondence from Cheng Liu, just indicating that they could still access a lot of things from Apple. Now, whether or not they use that, abuse that, that's up to allegations and up to lawyers. And then there was one more. Yeah, right here. Over 400 former Apple employees now working at OpenAI. So this is one of those complaints. Although, to be honest, I don't know necessarily that is. Do you know how many employees that OpenAI has? It's a bunch, I know.
Yeah, a lot, I would say, but I don't know
So
the exact number.
maybe former Apple employees have the most, but former Apple employees also doesn't mean that they went immediately from Apple. If you look all over the Mag 7, big tech, you're going to find a lot of employees that have worked for those other companies that now work for OpenAI. And it's just kind of the nature of the business. They like to cannibalize.
They
And
they have between 4,500 and 8,000, but closer to 8,000.
Yeah. And I would guess, like, we'll have to see, but I would guess that the former is not jumping immediately from Apple. Now, they might have a couple of hundred, and it was a mention here as well, the 6.5 billion deal basically to acquire Johnny Ive. It was more than that, but so yeah, that's the allegation, is basically using Apple's trade secrets for the design finishing related to the metalworking itself. So we'll actually have to see how this plays out. But I guess, Tevis, what do you think comes of this? And do you have concerns as it relates to the AI trade?
What I think comes of this is some very entertaining discovery, and I don't think it has repercussions on the AI trade in general. I think OpenAI has had some very shady practices and controversy swirling that company for years now in many different forms. And this is just the latest in a long series of playing on the edges of that gray area. But this is the thing that I wanted to bring up, because it was a little bit of the discovery, I want to say, from the Apple lawsuit. Have you read this at all, Roy?
No.
So here's the case, essentially. So Chang Liu, after leaving Apple, failed to return a work-issued laptop. And he said, I still have another computer, which he planned to access Apple information. While employed by OpenAI, he used his former colleague's Apple-issued laptop in Apple's network without authorization, exploited a previously unknown authentication bug on their shared network folders. And that's where he said, LOL, that was so funny, that he accessed that unauthorized system. And the more interesting part is he consistently opened over a course of several weeks while developing hardware for OpenAI, Apple's confidential hardware related files, including details around unreleased products, engineering presentations, and tech specs. So, as we know, OpenAI has hardware ambitions as well, and nobody does hardware better than Apple. And yeah, it seems as though they have unfettered access to Apple's actual private, sensitive information. Of course, we know Elon says sounds pretty bad, and we know his beef with Sam Altman. But yeah, I think Apple might have a case on this one, Roy. I don't know.
Yeah, I mean, I'm not a lawyer, I'm not a legal expert, but this person right here, Leo, probably for sure, like at the very least, but he works for OpenAI, and so there's ramifications there. Now, how much? I think it's going to be hard for Apple maybe to prove, but we'll see what actually comes out of this. How much them accessing these things influence anything that's related to what's coming out with OpenAI. But I would be surprised if it's just a nothing burger. Now, well, I don't know about that. I would be really surprised, but would you think that would be likely to happen?
Yeah, I wouldn't be shocked if that happens. I mean, I know, like, when you get shareholders involved and going public, like, we've seen this happen in the past with founders where maybe they're not as polished as a public company demands, and they get booted. Sam Altman would not be a stranger to getting booted from his own company. That's happened before, guys. So there's definitely precedent for that to happen again.
Yeah. Yeah, I mean, it's possible. I don't know though, but yeah, it does seem like Apple has some merit here. Now, let's talk about AI trade implications. You said no, you don't think it necessarily has any implications. Did I hear that right? And then, like, why would you not be concerned as far as, because to set some of the context, I don't remember. I believe OpenAI has partnerships with Nebius and also CoreWeave. I know with CoreWeave that they do. I double checked on those things. They do have one with Nebius as well as a couple of their data centers, correct? I know with Microsoft they have a partnership too.
OpenAI does? Mm-hmm. I mean, I know OpenAI is very heavily connected with ClickHouse. I'm not sure if they have a direct partnership with Nebius. I think they might. Let me double check for you, but I think they might.
Uh, well, yeah, and that's I'm getting asked about that as far as CoreWeave. CoreWeave, of course, like everything else today, or most everything else, it's not VG or gas related. Didn't perform very well. Palantir actually was up slightly, but
Yeah,
regardless, it felt
no,
very much like April, which we'll talk about in a moment. Did you find it?
they do not have a direct official partnership with
Okay,
Nebius.
yeah.
They have investor connections. They have shared hardware pipelines. Of course, the ClickHouse connection, but according to Gemini, there's no direct partnership.
Yeah. Yeah, for CoreWeave, there is one, a
Yeah.
direct partnership with OpenAI. It's for 22 billion. It was extended a couple of times. This, I was actually looking back through just before we started here today because I don't recall if it is a take or pay. I do know, like it was very interesting in the way that this contract was done. But yeah, regardless, I it's hard for me to look at this and say, okay, well, as much revenue as OpenAI is generating, certainly, it could be a blow for them, but I don't think that would cause them to default on anything. They have a lot of means at their disposal to raise additional funds. It's probably not the best timing. It's what a lot of analysts are saying, because it can impact, what happens if and when well, I think it's more of a when they IPO. But yeah, regardless, these things also take a long time to play out too. So I would say, like, if there's a scenario which I don't envision where CoreWeave all of a sudden, not CoreWeave, Nebius no longer needs CoreWeave and it is not take or pay contract. I need to double check it whether it is or not. But if they can exit, honestly, that's probably a good thing for CoreWeave right now, because right now we're in a supply crunch that's absolutely insane. And so let's say like a year, year and a half, 2 years from now,
Mhm.
this scenario happens where they're like, hey, maybe it's not take or pay. I need to do some research there. But they're able to back out of the deal. They say, hey, we don't need this. We can't pay it right now. We're too poor. Very unlikely to happen. But if it did, like, that's a huge benefit for CoreWeave, because all of a sudden they have this huge 22 billion. Now the stock would still take a short term hit, but believe me, with like Mark Zuckerberg's comments very recently about customers unsolicited walking up to Meta and saying, hey, could you please have any spare capacity for us? We're desperate. Seeing the size of the deals as well with SpaceX, that's not something, Tevis, that's going to be easily solved in the next couple of years. And so, like, I don't really see this as bearish for CoreWeave. It's certainly not the reason why it's selling off. And I don't think it's bearish for anything else in the AI sector as well. It could cause some delays on OpenAI's end, but yeah, they're not profitable, but they generate a lot of revenue. They have a lot of investors as well.
Yeah, let me sort of give you the bearish stance and the bullish stance in terms of how much does this spill over onto the AI trade in general. So the argument for it not to spill over is the fact that this is isolated to OpenAI and it doesn't really impact any data sensitivity or any PII or anything like this. It's mostly around their hardware build out plans. And if it was, oh, here's a leak of all the user sensitive data and all these businesses sensitive data that they put into OpenAI, that would definitely be more harmful to the AI trade, because then there's a lack of trust in terms of businesses and individuals using these LLMs. But it's not. It's them suing them over their hardware. Now, the other side of the equation is that OpenAI is essentially on track for about $30 billion of revenue for 2026, but they have a net loss of about $40 billion back in 2025. That's what they had. So they're running at a loss. They're growing very quickly. Having a major lawsuit like this and a big fine to boot is not going to be good for OpenAI. And it's going to be a big financial hit potentially, right? What's more is it's going to be a hit for the sentiment, but also for all the investors in OpenAI. And we know OpenAI is backstopped like 10 ways to Sunday from all
Yeah.
these different large companies. And so it really is the start of the ripple effect in terms of, if that domino were to fall, then it drags down everybody with them because of the Nvidia connection, the Google, like all of these companies that are essentially invested in OpenAI have bought shares of OpenAI. So I think that's the piece there, is that Apple can really throw a wrench into the works, and if that were to happen, then it brings everybody down. But I don't think this is going to be something that causes OpenAI to go bankrupt. It's going to ruin their business model. I don't think it's going to be anything like that. They're going to get a slap on the wrist, most likely. They're going to have to pay a fine, maybe even a big fine, and that's it. I think the more sensitive piece here, Roy, where it would have been instrumental to the AI trade, is if you had PII leaking, if you had personal data leaking, because then that's a question that's raised for Claude. It's a question that's raised for Gemini and everybody else, right? But so long as this stays isolated to the hardware side of the house, then I think we're fine. But who knows what Discovery reveals in this lawsuit?
Yeah, I think at worst, it's a bit of a speed bump. There are enough models out there, and of course, Anthropic's there. If OpenAI falters, they have some major issues. Which, again, like I think you're right. Hardware side a little bit different than software side, even though the revenue's tied together.
Yeah,
but there's enough there to pick up the slack. The Nematron system that NVIDIA, Palantir, and others are and also Nebius are participating on, that's focused on the open source models. That's going to be increasingly important as well. We're seeing just a lot of demand there. So I would be surprised if this is anything more than just a speed bump, no matter how it shakes out at worst case scenario. But regardless, that's not really the main reason why we are falling today. So would you like to talk about macro and what's going on here?
So there's macro to discuss. There's also Meta, and Nebius had some news today, which I don't know if you saw or didn't see. But
no, I didn't see that.
Okay, cool.
You gonna bring it up?
Yeah, let me just bring that up very quickly, and then we can go into macro eventually, because it's a very small piece of news. And that is, of course, a piece of news by our very own Manuel that came out an hour ago. Market didn't move because this is unconfirmed news, but Nebius is opening its first data center in Wales. The company's infrastructure footprint continues to expand, Manuel says, and he got this off of a data center recruiter on LinkedIn, who flat out says Nebius is opening its first data center in Wales, in Newport, and we're now building the team that will bring it to life. So, of course, this is alpha, guys. This is a piece of news that hasn't been officially announced by the company, but it has been announced online. I mean, this guy, Conrad, probably messed up in some way, shape, or form. But at the same time, when Nebius expanded to multiple countries, including France and Spain and Finland, like the hiring on LinkedIn preceded the press release by many months in some cases. Like in Spain, it was, we knew the Spain data center was coming like 5 months before it was actually announced. And so at some point between now and, let's say, October, they're going to be announcing a Wales data center. Most likely, they're going to be announcing this on the earnings call, which is going to be coming up in the next several weeks here. But yeah, you guys have heard it first, as thanks to Manuel. And Nebius, as it stands, is down almost 1% in after hours. So this had absolutely no implication on the stock. So that, to me, is alpha. I don't know how you define it, Roy, but that's alpha to me.
Obviously, because it's down 1% after hours and it's down today, that this is bad news, right? That's how it works.
Exactly. That's more data centers, more stock down.
Yes. Yeah. No, not really. Okay. So yeah, that's actually really interesting, and it's one of the things that initially excited me about Nebius so much was their positioning in Europe, their exposure in Europe. Even though they were building out more at the time and more focused on the United States, I saw that as a very, very good strategic advantage, especially with the rift between Europe and the United States with tech. And that rift might actually be getting wider with news from the Strait of Hormuz, which is, of course, causing the ripples in the stock market. But specifically, it's this right here. So from Donald Trump, the president, so I don't need to say president. You guys know who he is. The Hormuz Strait is open and will remain open with or without Iran. We are reinstating the Iranian blockade, so named because it's only stopping Iran ships, and so forth. Like, this is a part that's important. They are looking at instituting basically a rate of 20% on all cargo shipped, which is actually something right out of Iran's playbook. And people are not happy. United States internationally as well. Nobody likes the Strait of Hormuz being closed. I actually saw some interesting news with United Arab Emirates specifically actually opening up or looking to open up a new port on this side of the Strait of Hormuz simply so they can actually not have to deal with all this stuff with Iran. But yeah, this is just an on again, off again ceasefire. That now there's a lot of challenges with this. Obviously, inflation is something we're going to talk about in just a moment because that's a big part of this and it's a big concern here. The other part too is we have a ceasefire and it kind of works for like 2 days and then it starts falling apart. And so, yeah, you see the headline right there: U.S. Iran bombing now. We'll see. At some point, there will be another ceasefire announced. They'll say that they have an agreement. At what point do you think that the market and perhaps the world stop believing that there's actually going to be a lasting ceasefire here?
I'll get to that, but first let me react to this. I don't think it's going to be 20% on all cargo ships, man, because I don't think there's any way in hell the US is going to be charging 20% on China, on allies in the Gulf region. I think they're going to be charging 20% on anything Iran related, and Iran is going to be the only one paying those tariffs, let's call it. Because if it was on literally everything, then I think this would be incredibly short-lived blockade because the international community would essentially speak up. Not to mention that there's a complete lack of proportionality. Like the Iranian officials were saying, like, hey, like, they're charging 1% or $1 a barrel, something like that, and meanwhile the U.S. is charging significantly more than that. So this is a stopgap, I think. In terms of when do I think the market believes this, I don't truly know. I mean, the original hypothesis we had was, look, midterms is coming up. You can't really afford to have um, loose ends, let's call them, going into midterms. And so as a result, like, you would have to close that up sooner rather than later and then focus on midterms. And I mean, right now, what did Trump say? Was it Fox last week or who was it, where he was like, hey, like, oil is down quite a bit. So he is obviously looking out for oil, and this is doing the opposite effect. I mean, the VG was up, oil was up. And
Yeah.
the piece here, Roy, which is very interesting and as a backdrop, is the Fed meeting that's happening in July. Because all this does is it brings up inflation, which brings up the potential of rate hikes. And if we have that, then every high beta name under the sun is going to be getting hit, including many of the fintechs, SoFi included, Figure Technologies included. Like, these are all companies that will thrive under a lower rate environment. Ironically, the FOMC meeting is on July 29th, the exact same day as SoFi earnings. So I don't know if we want to talk about that, but I mentioned that in a video last week, and I said, like, it's going to be impossible for management to issue any type of guidance raise or anything like this because they don't know what's going to happen later that day at the FOMC meeting. And this event right here hurts matters rather than helping them because it pushes Warsh's hand more towards a hike than a pause. And I mean, we can check the FedWatch tool. I know yesterday when I checked it or 2 days ago when I checked it for my video, it was like 68% stay and 32% raise, something like that. I'm sure those odds have slightly changed over the past 48 hours, but
Yeah, let's pull those up. So I have it right here if you want to. So this is looking at the end, and it is moving around quite a bit. Current rate 350 to 375, and we can see how much it's shifted. So a day ago, we had about 15% of people saying, hey, probably nothing's going to happen. And that's the best case scenario. Now only 10%. And so you can see a shift here towards more rate hikes, not rate cuts. And the current main, I wouldn't say consensus, but more people than not are expecting 2 rate hikes. Some of that, of course, has to deal with comments from Fed governors. This is from Waller. I don't take the inflation signals I have discussed today lightly. If we get another hot reading on core inflation this week, then FOMC will need to consider tightening monetary policy in the near term. And yeah, the stock market, of course, reacts very negatively. Now, can
you go to July?
And it's like impossible to say with the Hormuz situation. If it continues to be unresolved, that causes inflation to drive up. Here is TTF, by the way. This is natural gas in Europe. Great for VG. VG spiked today. But the reality is this causes a lot of inflation pains. We can see crude oil here is climbing back up to 78. Brent crude, likewise, is up about 10%. Gasoline up about 6%. Heating oil as well. And yeah, it's a mess. Thank you for the birthday greeting, so.
Yeah. So, I mean, look, I don't know how short-lived this stint is. Trump did say he's going to make an announcement Thursday at 9 p.m. I don't know what more to say other than that. Like, it's I don't know. If we get a deal, I don't trust that anymore. It's like the boy who cried wolf at this point.
Yeah. Yeah, it's really tough. And this is the one fear that I've had on the market. Like the one thing that really could cause a pretty massive sustained pullback. If the announcement, and this is like, I'm just thinking worst case scenario, if Trump announces something like, hey, we're going to put boots on the ground in Iran, that's really bad. That's really, really bad. I might end up buying some downside protection going into Thursday. We'll see how we continue to trade out over the next day or so, or next 2 days. But man,
boots on the ground in Iran would be like like at that point, it's sunk cost fallacy. You have to go in and finish the job entirely and wipe out the regime because there's no other you can't just go boots on the ground and pull like another Afghanistan.
Yeah. So yeah, this is not great. So I guess what are you doing about it, Tevis?
But Congress would need to act for that, wouldn't it? Like, can't Congress?
They're supposed to.
Well,
the last time, guess the last time when the United States declared war through Congress.
Through Congress, World War II.
Yes.
So Korea and Vietnam and all of them were just what? Military operations?
Military operations, peacekeeping missions, they name them all sorts of different things to try to get around that. So there have been authorizations that have passed through Congress. For instance, when we went into Iraq initially, but yeah, we've moved so far away from the founding fathers' vision of the Constitution in some good ways, but in a lot of negative ways. And that's one of those that the executive has a lot of power and discretion to do things that are very warlike, that sound like war, smell like war, look like war, cost like war, but it's not really a war, even if it lasts 20 years and costs a lot of money. So really, really hopeful that doesn't happen. I don't mean to be a downer, but like it is good to think about the worst case scenario. So like, I think the only thing that I would do at this point is maybe get some downside protection, maybe going a couple of weeks out into Thursday. I don't know that I'm going to buy that right away. Not too many people are thinking boots on the ground yet. So, and I don't think it's very likely, but there is a possibility. And that worries me on multiple levels. As a dad, for young men that could have some obligation there. Also, as an investor, also for a lot of people that are affected, usually the lowest income by inflation. It's a mess.
I mean, I'm not so much, I think you're not going to get to a point of conscription, but I do think that boots on the ground would just be silly, man. Like, I just feel like that's the, nuclear option, bad choice of words, but it's an extreme to get to that point. But at the same time, like, if there's one thing about Trump, it's we can all speculate as to what the end game is and what the game theory is. And in many cases, we're right in terms of, how far he goes with his bluffing. But I think he goes even further than we all think as well. Like I would have thought, okay, he bluffed, he bluffed, he bluffed. He got the MOU, he got the ceasefire, great. And then you start bombing again. And it's like, okay. And Iran's like, okay, like we want to come back to the table. And he's like, oh no, I don't trust you guys anymore. I'm like, okay, dude, like, what is the end game here? You know? And it's just escalating again. But look, at the same time, barring a boots on the ground situation, which is definitely not off the table entirely, but let's just put it aside for a second. I don't know that the market is going to be carrying in the same way that it was in February. Sure, oil is going to rise. High beta names are going to take a hit momentarily because people are just going to take their chips off the table. But at the same time, like you have a great setup with many of the names that we're in for the AI trade. The demand is, you can't argue against it. It's very much present. And ultimately, I mean, you've had plenty of macro geopolitical hurdles, let's call them, and we've climbed the wall of worry all throughout. I mean, you had Ukraine, you had the Israel conflict, you had.
Yeah.
I mean, you haven't had the U.S. directly be bombing another country, but I don't see the market having no prolonged sell off on this. If we have one rate hike, yeah, you might have a bad month, but I think you're going to come right back.
Okay, so I have to show you this too. I was thinking, like, should I do this or not? But this is in Sid Trini, who is a pretty well-known short seller. This is their prediction: Monday, war; Tuesday, hot CPI; Wednesday, Warsh apocalypse; Thursday, war over; Friday, AI bull market. Thoughts?
Have you seen those memes where it has like the Google Store, time slots for the Strait of Hormuz, and it's just like open
Oh yeah,
Monday to Friday, 9 a.m. or 9:30 a.m. to 4 p.m. closed every other day. Yeah, like
yeah.
that. I mean, people are making memes out of this stuff at this point. Like, this is what I'm saying. It's predictable, but at the same time, like you don't really necessarily know the limits that he's willing to go, and that's the scary part. That still to this day, regardless of him having repeated the same pattern like 20 times at this point, keeps people on their toes.
Right. So anything else on that? Otherwise, we'll talk about maybe just a couple other quick topics and go into the Q&A. I see a lot of good questions in the comments.
Did you see Meta's Louisiana news today?
Oh no, somebody you mentioned it. A couple other people mentioned it as well. I did not see it, so I would love to know what's going on there.
Yeah, so Meta announced an investment in Louisiana. They had a $10 billion investment there that they're raising it to over $50 billion, expanding the site to 5 gigawatts of compute capacity. And yeah, like I don't necessarily this. I think is a 2030 plan, if I'm not mistaken. But yeah, Evan was talking about this as well. So increasing data
Wow.
center investment, expanding the DC. Said the expansion will be investing over 1 billion in local infrastructure improvements, including roads, water, and waste systems. This is my main question that I had. This is an interesting question. Jay says, how can they build a 5 gigawatt data center for 50 billion when NVIDIA claims it costs 50 to 100 billion per gigawatt? Nothing is adding up. So these are like plans that Meta has. This is not like, it's going to take time to build out is what I'm saying.
Yeah, I mean, like part of that, the answer there is NVIDIA has the premium product that costs a little bit more as well, but that's honestly a fraction of the cost of the data centers. I would have to look back into the comments that Jensen made. I think it was at GTC, but in essence, his argument was you're spending a crazy amount, not his words, but it is like a vast amount on these massive data centers. Why would you not put your best product in there when it adds to the cost of like, just a fraction of an increase of that already crazy amount? The choke points that are really driving the price are certainly things that are like in memory, power consumption as well. The GPUs themselves are very expensive, but yeah, there's a lot of other factors here. So, but yeah, it's interesting. We'll have to see. Do you know when that's expected to come online, or are they so early? They probably haven't released a date yet, have they? Yeah.
I don't necessarily know. Let me see if I can find that for you, but I didn't see anything on that.
Yeah. Yeah, they might be a little bit too early. There's a lot that has to be done on the front end. They can announce plans, but it's looking like most large scale data centers like that. We're talking about something that's like next decade, not 2029. But it depends on what they already have lined up. Meta does have a lot of contacts that are in the space. They've been building this out a lot of time too, so maybe they can accelerate that some, but it takes a while with the supply constraints the way they are right now. So we'll have to see.
Yeah. Okay. Let me share this. Please ignore how silly my question is phrased because I'm trying to do it quickly. Meta announced expanding Hyperion, Louisiana, from 2 to 5 gigawatts of compute capacity, raising the investment to more than $50 billion. Meta spokesperson told CNBC that it should reach 2 gigawatts by 2030, with the full 5 gigawatt project completed around 2032. So nothing is online until 2030. This is a long-dated build-out on not near-term capacity. On the power side, you have a dedicated power plant to be online by end of 2028, ahead of the data center. Meta says it pays the full cost of energy, water, and infra, so over $1 billion into local systems, with $1.6 billion in contracts already awarded to local Louisiana businesses since December 2024. Blue Owl is among the project's financial backers. Yeah.
Yeah, used to be a lot of concerns whenever you'd see Blue Owl's name, but private equity's not been bleeding as much as it has been in the past. Yeah, and I agree with Zom. Nice caveman type question. So, but no, that's actually I would have, if I had put a date on it, I would have guessed 2031 would be the earliest it would be operational. 2030 seems, for 2 gigawatts, pretty ambitious. But again, they do have connections already and agreements lined up, so they might be able to accelerate. But yeah, that's still a ways out. And again, Meta has these long-term contracts that they're very happy to pay on, because if they want to actually create a legitimate data center business, it's going to take a long time to bring those on, and they'd rather have these long-term contracts and sell their own supply. So I just keep seeing this more as a validation of what's happening in the space. There was a pretty good interview. Let me actually see if I can pull it up. I always forget her last name. Molly O something.
O'Shea.
Yeah, O'Shea. Thank you. So she had an interview with Cerberus's CEO, and it was really interesting. Some of the topics, of course, so in case people don't know what they do, they IPO'd last year, or no, it's earlier this year. They have extremely large scale AI chips that they've been designing. And so there's a lot of questions related to that, and it was a really good interview just because all the topics that she addressed. And so let me just show you like a quick thing. So, here's a timestamp. So, the truth about the global data center shortage, why data centers are borrowing jet engines for power, are data centers really headed to space, the shift in designing chips. Oh, yeah. So, there's a lot of good stuff here, though. But overall, he like almost everybody else that has any sort of read into the space are not concerned at this point about oversupply. They're just saying, hey, we're so far behind where we should be as far as data centers. He talked a little bit about the reasons for that, but I again just like see what Meta's doing as far as their entry, as far as these announcements, as further validation of the thesis that we are structurally so ridiculously short on what we're needing for inference that it's going to take it really maybe we hit the point where it's no longer at a screaming demand in 2030, 2031, 2032 maybe. But I think that's like the most optimistic if you're looking for cheaper prices there, because it takes a long time to build this out, and at the same time use cases are only increasing. And even if it becomes cheaper on a per token usage, which is certainly a big focus right now, that plays right into the Javon's paradox. So further use cases are developed. It's a feedback loop. Like, okay, so one more thing on that real quick, and I'll turn it over to you. I had to go back today because I was like trying to remember back in the dot-com bubble. I was significantly younger, but I didn't remember the internet as far as demand, as far as consumption, as far as use cases, like contracting during that time, despite what happened with all the dot-com stocks, despite a lot of the web domains eventually being taken down just because there was no real business model there. And yeah, case in point, even in that time when there was a struggle on the investment side of it and it was a bubble that ended up popping, the internet still exploded regardless. And I view this as much as the same, Tevis. It was just 3 years ago where nobody was really using AI. Like it didn't exist. And here we are. It's accelerated so fast. And that acceleration, the rate of acceleration is increasing. Not just the overall usage of AI, but the rate is actually still increasing, which is just telling to how real this is, how palpable it is, how long this driving force on the supply versus demand side is going to last. And that's a really good thing for pretty much anything touching the space.
Yeah. Okay. Two things I'll say. The first, just a response on the meta point. Nebius and CoreWeave and others fell as a result of Meta potentially in the future selling excess compute. And every time we have news like this of them expanding their capex into DCs, it points us into the direction that they will not have excess compute because they're not having a business model like Nebius where they build DCs to sell the compute. They're doing it for themselves first and foremost. And only if there is something left over will they sell it. But there's not going to be anything left over. So I want you guys to rest assured in that. The second piece, I think, with regards to AI, the parallel with the internet is that when the internet truly gained exponential scale was when the social networks really came out. And that was some years after the actual rails or the infrastructure was set up. And I think it's going to be very similar with AI. Right now, we have the infrastructure being built behind the scenes. I don't mean hardware. I don't mean data centers. I mean the actual LLMs training, going into an agentic use case, and you have now startups that are AI native startups. I think the real explosive growth, the paradigm shift in AI is going to be some years from now when some of these AI native startups actually find product market fit and through agentic use cases scale rapidly. Okay. Because LLMs are essentially the new playground, the new terrain. I want to see the businesses that are built on top of this terrain. And that's going to take a little bit of time. It's not going to happen overnight, but I think by 2030, like by the time this data center comes online, you're really going to have some businesses that neither of us have heard of before go supersonic to tens of, if not hundreds of billions of dollars of market cap from now until then.
Right. No, I think that's fair.
All right. Yeah, go ahead.
Oh, I was going to say, I've got one other topic before Q&A. Do you have anything else that you wanted to share? Mine's related to earnings.
No, go for it.
Okay. So tomorrow, at least for me, earnings season actually kicks off, and it is with this company. Yeah, Air Test Systems. So I don't have an earnings preview video, but this is what analysts are expecting is you'll see some revenue acceleration. So consensus, and there's like very few. I think there's 4 analysts that have covered this name. It's like news when a new analyst is like, "Oh, I'm going to cover these guys because they're tiny." But you should see definitely some revenue acceleration. I think that's actually a pretty good guess. EPS, I think, might actually be positive, but if not, they're very close. What's going to be more interesting though is 2 things when you're going in. Like these numbers, they could absolutely cause algos to do algo things, and maybe it sells off, and maybe it goes up, 30%. Like who knows? But first, like this. Oh, I shouldn't have closed that. My apologies. First, I want to show like the share price. And this is a little bit volatile. So we can see it's down to 68. If we were trading up here, at the 120s or something like that, I would have more concerns with the share price going into earnings. At 68, it's actually right around fair value for me. My price target that I put at the very beginning of the year was for $70, and we went way well past that. We've retraced. A lot of that is just tied to the broader macro. They have announced a couple of major deals since that time, and so one of the things that is really the most important thing to look at when you're looking at air test systems is not so much the numbers as far as revenue and EPS. They are important, but it's this number right here, which is effective backlog. This is, by the way, not just backlog that they had at quarter two's end, but instead at the moment that they do earnings, this is their entire backlog. And that's important because, again, they had this additional sale, probably with AEOI, another Silicon Photonics, their lead customer, and one other as well since earnings. So this is going to be somewhere 80 to 100 million dollars. Again, it's a very small amount. Now, where air actually goes from here, a lot of it is going to depend on what Gain Erickson says as far as where some of these deals are. Like the biggest catalyst that could happen fairly soon is one of the other hyperscalers has been doing engineering qualifications and looking at using air test systems within their automated testing equipment for their own ASIC design. They already have one hyperscaler. If they have a second one, this could do something like double their revenue, which is amazing. Could actually do even better than that. And there's some durable revenue as well, just because of the design of their products. But regardless, that's one of the big things. The other thing is this is the beginning of their fiscal year. So they have, ever since the Liberation Day stuff last year, they retracted their guidance like a lot of other firms. They've since restated it. So we're likely to get a full year worth of guidance. That's going to be significant because he's hinted at things that are happening in 2026, but we're going to get a glimpse of what the expectations are a little bit further out. Hopefully they do guide for the full year. And then the last piece, this is actually almost a month later than what Air Test Systems usually does their earnings on. They did that to be in greater alignment with a lot of the other names that are in the space. But we'll get that data as well. I don't know if we're going to get it during the earnings call, if they'll release it separately a little bit later. But regardless, we're going to see that data, and that'll be really interesting to see where they're at. So yeah, I'll be paying attention to it. I don't know if I'll be able to cover it live, but if I do, you guys will see it pop up if you're interested. I know there's only a few like Air shareholders, but yeah, I'm excited for this one. But it's not a make or break quarter at all. It is important, especially with the guidance. And so I'd say guidance and effective backlog, that's what to pay is there to pay attention to this time.
Yep. I have 120 covered calls on air, and I was looking to close those. I only opened them like 2 days ago, like on Friday. And I was up about 30% on them with like one trading day, and they're for August 7th. And I was thinking of closing them because of earnings, but I didn't. So I don't know if I should do that tomorrow or if I'm going to be toast. But
well, what strike did you say?
120.
Oh, you're probably okay. Yeah. What would have to happen, and I think it's very unlikely, is either a major hyperscaler is landed, or they have a major deal with one of the memory makers. That one I think is a little bit further out, just the way that these things usually play out. They may have some announcements that cause some pop and excitement, but that's almost a double, Tevis. I mean, you do you. Yeah, I sold most of my air position on cover calls at like 170 strike and got paid over $400 per contract. Those are now worthless. And I'm like, I'm not too worried about air popping up now. I wish I'd done all of my position then, but yeah, regardless, that's where we're at. So yeah, I do see some, Lisa, thank you for your support. She says cover live. I will try. I think that I'll be able to do that. I probably won't know until maybe about noon on tomorrow, but yeah, I'll aim for that. It'll be fun.
Yeah, I was even thinking about selling some cash secured puts on air over earnings. I don't know, maybe like Lisa's saying here, the $40 puts. Let me take a look actually live with you guys. So there is no $40 puts for August 7th, but I can't see $40 puts anywhere, Lisa. So $45 puts, however, or no, yeah, $45 puts are about 5% return a month out.
Yeah, Raven Terp asked if air earnings has no surprises. So in other words, there's nothing bad there and it sells off. What price would be a juicy dip to buy on? I think it's attractive here. Again, it's in my fair value range. if you see a price below 50, it's not financial advice, but man, that's a really good price on air test systems. Again, assuming there's no negatives. Like if they come out like, hey, these guys are actually funding the Iranian regime, the United States is going to start striking them. Like, then yeah, don't buy that at 50. But otherwise, like no real negative news, no big surprises. Under 50, I doubt it gets there, but it could. It's very volatile, and algos will do what algos will do. So,
Yeah. Very interesting regardless. Shall we go into Q&A? What do you think?
yeah, that sounds good to me.
Okay, you guys know the drill. We have 24 questions already bookmarked. And room for a few more, not too much more. But yes. Does OpenAI have any partnerships that have not gone south? Great question. It's debatable because a lot of them have gone south.
Yeah.
Just one of the reasons why I wouldn't invest in OpenAI if they went public.
Yeah. Leadership. It matters. I'd rather invest behind Dario.
By like a razor thin margin, but yes. All right. Meta news. We covered this. Are we buy CoreWeave?
Well, I'll show this.
It's at $83.
If I had money, yes. This I came out with today. It's showing my positions, and I ended up higher than here, of course, buying shares, and higher than here, not too much, but a little bit, buying some leap contracts on CoreWeave, which is now my second largest position. Maybe Air changes that tomorrow. They're very close in size. Robinhood is still by far the largest. So yeah, I bought. It's about 20% weight right now. So that's a large weight. Half is technically swing. It's all my swing stuff. I just collapsed and contracted and put it into CoreWeave. And I think it's a really good opportunity. We'll see.
There you have it. Big Dog Roy buying CoreWeave. I have just my leaps and my cash secret puts, and that is all. And both of whom got hit today. But that is all that I have. I don't have shares of CoreWeave. But I do have a whole bunch of Nebius though. So there's that.
Yeah. It feels good when it's going up. When it's like today, not as much. But you know.
Yep. When's your next Nebius video, Tebius? And glad you sound and probably are feeling better. Yes, I am. Thank you very much. Next Nebius video at some point soon here. I've been slacking on making content altogether. If I'm being honest with you guys, it's reflecting in my numbers. But I think I'm going to be getting back on the horse relatively shortly. It's always tough, man. Like you go and change your environment and all of your habits just go out the window, and it's so tough to like get back into it. So I will be making some more Nebius content soon. Thank you for keeping me accountable. With hikes becoming more likely, do we think SoFi heads back to 15, or does it depend on earnings? Great question, Connor.
I think if we have a hike, it's not the biggest deal in the world. If we're looking at multiple hikes, which right now is edges out just one hike, that can be a challenge right there. Just there's several things happening. One is, of course, it's a little bit harder to lend into that environment. Although I will say banks weathered the storm without anyone basically working at those banks remembering the Volcker era under President Reagan when this was its environment. So this was a new thing that they had to navigate. And they also were thinking like, hey, this is going to be higher for not too much longer. It'll be transient and everything. And, you know, of course, these rates have been elevated for far longer than anybody, like even the most bearish people were expecting at the time. So they weathered it. They survived. They did well. I think that rate hikes won't be as detrimental if they do happen. You won't know it from the share price. Like the share price is going to be miserable. But for the actual business, it'll hurt some, certainly, but they know how to navigate it now. So SoFi, Figure, Upstart, the major banks as well, they'll all take a hit, but the underlying business will be okay. even with 2 rate hikes. Now, if we're looking at like 4 rate hikes over the next year, year and a half, and then we're just staying at those levels for multiple years, that's really bad. That's really concerning. Now, as far as price level, it might. It doesn't have to. We'll have to see what that announcement is on Thursday. But if we get the worst case scenario of like, hey, there's boots on the ground, that's going to take a while. That's maybe a long while. I really hope that doesn't happen. But yeah.
Yeah, I think it's going to depend on earnings. But earnings is going to depend on guidance because we know that they're going to be beating their numbers. Like that's pretty much a granted at this point. They've never missed their numbers. However, they kept their guidance flat in the previous quarter that they reported. So if they continue to keep their guidance flat or guide more conservatively, let's say, as is in their nature, I think that paired with the rate hike could absolutely send it back down to 15. I mean, 15 is pretty close. It's around the corner from where we are right now. We're at 18. And at the same time, I think if their baseline assumption now is no hikes, which got adjusted downwards in the last quarter, and earnings is good, I think you could also get a slight guidance raise. I don't necessarily know how much Warsh will want to raise hikes straight out of the gate. I think he'll try to be as reserved as possible when it comes to raising. So if I had to put a probability on SoFi going back down to 15 or rate hikes happening, I would say 70% they don't happen and SoFi doesn't go back down to 15. But we'll see. I mean, as we know, SoFi runs up going into earnings, and I think the numbers are going to be great, especially with big business banking and all the other initiatives that they're going to be talking about on that call. Like, the firepower will be there. It's just a matter of, will the market cooperate with rates? I think if you get both of those scenarios, like draw a little table. It's SoFi misses plus rate hikes, you're automatically at 15. SoFi beats plus rate hikes, you're probably where we are right now. SoFi beats plus rates stay the same, we're over 20. That's the rule of thumb cheat sheet that I'm using in my head.
Okay. Well, yeah, I probably wouldn't have concerns even if they hadn't kept guidance the same. But yeah, with guidance being the same with what they've announced as well, I don't really have any real concerns there. So,
Connor again says, any thoughts regarding CoreWeave? Do we think that more debt will be a problem with hikes? Built a decent position, but down about 10% on it.
So I'm going to show you real quick another thing that I did. So Connor, if you don't follow me on X, you don't have to follow me, but just pop on over to X. If you do follow me, you're going to see one of my most recent posts is looking at just kind of a brief rundown that's updated from the Artemis article that I did a month and a half ago. But yeah, debt, I look into that, in some detail here. And the bottom line is you do need to include liabilities into this. It depends on the company. Like a lot of times you just focus on that long-term debt more than anything. But here the liabilities are real and they're tied to their product. They can't just say, hey, we're going to stop paying for GPUs. It's like, well, then you don't have a business. So, but regardless, I think the main thing to look at is seeing what their backlog looks like this quarter. And there was a note from Cantor Fitzgerald right around the time that they did their most recent debt issuance that looked at some of the underwriting things, the documents there. And they noted in their analyst note that the backlog itself could be 131 billion, which is it's an amazing increase over where they're at. Even if they don't get that, it's well ahead of what analysts are expecting. And then in 2020, like at the current valuation, like if CoreWeave was trading at like $180 a share, I would have more concerns. At $80 a share, like we're looking at, this was earlier in the day. We've sold off since then, but the EBITDA in 2027 might be a 4, which is insane. If you look at price to earnings, and I go into all this here, there's a lot more detail. If you look at price earnings in 2027, or excuse me, 2028, forward price earnings in 2027, so next year, you're probably looking around a 25. I would guess if Cantor Fitzgerald is right, and they're actually well ahead on the backlog, and things continue humming right along as far as the deployment, it might even be something closer to 20 at the current valuation, which, given their revenue growth rate, they're doubling this year. They're doubling next year. They're expected to grow 60% in 2028. A little bit, the revenue side, I think, is very easy to model. EPS is not so easy, but like, I don't really have concerns here. The market does. The market is stupid, and it just doesn't understand how take or pay works. I think the problem is there's so many analysts that do, but they're all in the energy space. They're in the energy sector. So they're not paying attention to what's happening in the data center space right now, at least most of them. And for whatever reason, they don't talk to each other. So they're concerned about contracts no longer being there. This is effectively guaranteed revenue, is most of their contracts. I do need to look again into that OpenAI contract, though.
Yes.
But yeah, as far as like with rate hikes, a rate hike or two, it's not going to really impact them. They have a junk bond rating, so it's not pretty no matter how you slice it. But yeah, you like to dumb it down. Like their model is essentially they are able to borrow dollars, though with a junk bond premium, and then they're able to use that or convert that almost instantly as soon as the capacity is actually built out for a pretty nice premium over that dollar. And why would you not continue to do that?
Yeah. I think CoreOU will be fine. But again, we'll see if we actually do get a rate hike or not. Connor again, is BMNR a generational buy here or soon? If Ethereum really breaks out of this cycle in 2 years or so, and ETH breaks the 5K top, could we see $100 on BMNR? I wish I had more money. Don't we all?
I wouldn't use generational, but yeah, it could be over 100 in that scenario.
It could be. Of course, you would need an MNAV expansion,
which will happen.
Which will happen. Yeah, I mean, it could be like if ETH breaks the 5,000 top. ETH has been really uncooperative. If you zoom out over the last 5 years, it's been like underperforming quite a few different asset classes, but it could absolutely happen if the underlying goes up. Thoughts on QXO?
I liked the acquisition that they did just to further strengthen what they're trying to do with the builder supply stuff. But that was, I think, 3 months ago, maybe 2 or 3 months ago. I've actually not looked at it since then other than just stock price action. I looked at it today and I'm like, let me pull it back up just so I can make sure I get it right. Long term, so I'm not an investor other than the $100, which is now like $60. I believe in Brad Jacobs. Like he is very, very good for this type of business. It just takes a while. So if we look at it year to date, QXO is down now almost 30%. And it's just falling off a cliff right now. It's going to take a while, I think, for this to play out. But yeah, here, catch up on the news. I've not followed it like extremely closely in a while. But it's hard to look at this and not see it as a good opportunity at this price range. If we were trading at like 26 or whatever, I'd be like, yeah, maybe. This is cheap. It can get cheaper though.
Yep, it can always get cheaper. I think hasn't QXO been like down heavily over the past this year at least?
Steve gave it to me for the gift thing, and so it was just inevitable that. Although I think ironically he was going to give me Verizon, and I think Verizon's actually done pretty well. So relatively to QXO, a lot of our picks honestly have done really poorly except for Air. And we'll see how that shakes out by the end of the year. Verizon's up 5% this year, so it's not terrible. Plus, you get a little dividend.
Yeah, I mean, ironically, I think Peloton's flat year to date. So
pretty good.
Not even the worst one on the list. You're welcome, Tanner.
Yeah, D local is getting beat up, or at least
Oh,
So
D-Local, the foreign
that
stock.
that was Tanner's pick. Yeah, I actually have an article coming out. I'm still working on it. No, D local is actually up 5.5%. Wow, it's really recovered a lot. There's been a lot of fintechs that have been running too in some international stocks, and today, core software. I like my odds. I
Yeah,
do so well with the individual stock pick things, like the gift exchange, and I do so poorly when we do the draft and we have to go through like 150 names. I'm like, man.
dude, I just checked the chart for Peloton, and it opened the year at $6.12, and then it continued to drop. Literally, Roy, 40%. It dropped in February, and then since its bottom in March at around $3.70, it rose 65%, and it's now completely flat from where it opened the year. It's down 4 cents at $6.08. Wild.
Very
Wild.
nice.
I don't know if very nice is how I would put it, but yeah, it could have been worse for sure. Um, all right, let's continue with our Q&A. How about anyone bought ASTS today? No. What is
No,
it?
yeah, there's
It's down 8%
actually,
today.
I'm not really interested in that company at all. So
Yeah,
I see
ASTS.
why people are, but yeah.
It is not. It fell quite a bit, quite a bit.
I have been doing more DD on Voyager, and I would say if I, other than Rocket Lab continuing to fall, in which case I'll start to get interested, and SpaceX, but it's so far away from being at a realistic price. But I would move Voyager now a little bit ahead of Fly as far as my preference. It's interesting. It's pretty. It's under a 2 billion market cap right now, Tevis, and they're exposed to so much or so many sources of revenue and strength. Like you would not think that with a space stock, but it's really interesting. I'm tempted. I just don't. I put my money into CoreWeave, and I don't have any extra right now. But man,
You know what I'm interested in buying right now?
what's that?
Microsoft.
Palantir? Oh,
Microsoft. Yeah. Talk about cheap.
it is. It is very attractive here.
Yeah. Raven
And there's
said,
a. Go ahead.
if you do good picking one individual stock, Roy, and not a portfolio, that means you need to full port your best idea. I agree
I
with that.
mean, I've done that basically in the past. In 2022, Palantir was 90% of my portfolio. So I don't mind outsized convictions, but with Air, I couldn't. Air was my best idea, but I'm like, hey, it's more speculative here. It's a micro cap. I need to be a little careful. In hindsight, I wish I'd went heavier, but yeah, CoreWeave kind of reflects that. So CoreWeave being at 20%, all of my swing portfolio plus a little bit extra, to be honest, and a 10% allocation on top of that. That's for me a large allocation for a new position, very large.
Yeah, Rocket Lab was also down at over 5% today. It's at $76. Wow.
Yeah.
It says Matt Money went from quitting corporate America, buying a Lambo, marrying a hot Colombian, to living in a box down by the river. Not quite. He was buying at $4 and it's still $76. But I get where you're coming from.
Yeah, he doesn't have a 20x anymore. I mean, like that has to be frustrating. I don't know how he's going to survive. Matt, if you're listening, you won't be homeless. I can give you a room. So yeah.
Yeah, he only has like an 18x and not a 30x like he had before. That sucks, man. That sucks.
Yeah.
That's tough. Let's see. Connor again. Lastly, I have the same leaps as Tevis for SoFi. I bought about 2 weeks before him. Do we think it may be an issue if rates keep getting hiked? I was thinking SoFi could be 25 this year. I think SoFi can be 25 this year, man. And I will go out on a limb and say that.
With hikes, it can.
Even with hikes, yeah. And like hikes, we're using the plural, but I don't think we're going to get 2 hikes. Like I think that's just ridiculously far-fetched. I think at the latest we get 1 hike, but even that is not like the base scenario. I think that we are not going to get a hike in July. We're going to get some maybe hawkish language, and we have to wait for more data. We want to be sure, because like if I was Warsh, I don't want to have my first action to be let me hike, and then literally the next meeting I'm going to cut again. Like that's just too much. Like I would rather just wait. Um, and if it is as bad as it, like I'm sure we can wait another month or two before we can make a decision on that. So
Yeah,
yeah,
I think boots on the ground are the only thing that changes it. But yeah, if they can always do an emergency hike, so don't read too much into this. But there are just 4 meetings left. He's not going to hike here. He can't.
wait, go to July.
July. Okay, July.
Yeah, but look, you have 43.56. This is what I was
Yeah,
saying with
there's no way.
65.35 like 2 days ago.
Yeah. Since this meeting, now if this meeting happened after Thursday's announcement, whatever it is, there would be a chance. But I'd say there's a 0% chance that in his first meeting that they end up raising. Now they may signal that they are heavily looking into raising, that they're very willing to raise even next meeting. So you'll see these odds shift quite a bit. You'll see the market not like that at all. The worst apocalypse is the worst case scenario. But I would be really surprised if they hike more than one hike. They can do multiple, but probably at most we're looking at a quarter hike. And usually, we'll see. It might be different, and this Fed president is less known. But usually, when you hike, you tend to, unless you are forced otherwise, and I don't think they have clear enough data on this. You're going to wait some time, and so likelihood of them raising twice in the year is pretty low. I think, especially given. I shouldn't close that. Well, if you guys know Mohammed El-Arian, he had some really good comments as far as what Warsh is trying to do, and both on video format, but also with a post on X that he alludes to. Basically, a lot of the methodology that the Fed has been using is at best misaligned with reality. That's a nice way of saying it's wrong and it's useless and it's given them bad information in the past. And so they are from top to bottom looking at basically analyzing and seeing if they're getting the best data, how they make decisions, what sources they should be using. And it's very, very comprehensive. It's actually been needed for a very long time. So I think that's the other factor here too, Tevis, is that's going to take time to play out. And I think Warsh is going to caution the rest of the board on raising rates until they have the proper methodology in place, unless they absolutely have to.
Yeah. Look, man, I think if they don't raise hikes in this July meeting, which I think you seem pretty strongly that in consensus that they won't,
They're not.
I think we're out of the woods, honestly, because I don't think that there's going to be many data points from now until September. And I just think if they let it go this meeting, which I think they will, then I don't think they're going to raise in September, personally. I think the macro situation is going to get better. Now, would it have been better if we just ended this Iran conflict altogether? Absolutely. But even in spite of that, from July to September, you got a good amount of time to have more data come in. So either way, I think SoFi can hit 25. And by the way, if they don't raise this time around in July, then I think SoFi can hit 25 by September. It can happen fast. 20 will be a breakout from that downtrend, and from a technical level as well. I think it can happen fairly quickly, but ultimately, I just maybe I'm a perpetual optimist. I just don't see the macro being as hawkish as other people make it out to seem.
Yeah. So the prediction markets themselves, I just took a quick look at Polymarket. They're actually pricing in greater likelihood of no change. Now that is shifted well from the 90% no change. That feels, I would probably put it at 85% no change. There always is a chance that something happens between now and then, but there's not much time left. Versus if you're looking at September, they're slightly pricing in a 25 basis points hike, and of course at the end of the year no change. So I think that's the most likely worst case scenario. Nothing, small hike, and then nothing, and then we don't have December's on here, but it's probably going to be nothing. It's a little bit further away, so it's hard to tell. So yeah, one rate hike's not going to kill SoFi, the business or the stock. It will hurt temporarily. They could still get north of 25 by the end of the year.
Yeah. Thoughts on when you expect profitability from Nebius and CoreWeave? within the next,
Yes.
yeah, exactly. Yes, within the next
Well,
year to 2 years, year for sure. You
let
expect
me show
profitability
what.
in 7, right?
Yeah, let me show what analysts are expecting, and then we can talk about whether or not we agree. So that's revenue. That's not EPS. So here's EPS, and we're looking at. I don't think you're asking about quarterly. Quarterly is probably sometime in 2027 for CoreWeave. But if
Yeah.
you're looking at a full year basis, 2028 is pretty likely. Now, the one thing you have to know with EPS, a lot of that relates to their build out and how that's going. If there's delays, if they build out more than is expected, that's not EPS accretive. I don't recall for CoreWeave, but I remember for Nebius, the expectation was 2027 would be profitable, and I don't believe that's the case anymore. We'll look at it in just a second. I was actually expecting it would be 2028 simply because the screaming demand is going to lead to them doing a lot more build out, which is going to delay the EPS profitability. But yeah, this consensus is wide apart, but $3.03 EPS is the expectation there. Let's pull up Nebius as well. And if you don't mind me pitching this while I pull this up, Tevis,
Yeah.
I will put a link in the comments here just now. It'll also be there when it's live. But yeah, Fiscal AI is my sponsor. They're sponsoring on this side of the video, me. But yeah, this is the tool I'm using. That's going to be a 2-week free trial. Save you a little bit of money if you do go through it. I think it's actually a 1-week free trial. Excuse me. So here's what Nebius is expecting, and actually is a little bit wrong. Although this again is a pretty wide range. Let me see if I can zoom that in a little bit more. There, is that viewable? Kind of.
Mm-hmm. Yeah, that's good.
Okay, so next year, it looks like consensus is 0.36. So just edging into profitability next year. Now, I think like CoreWeave, they're going to hit profitability at some point in 2027. But full profitability, I think, is going to probably be 2020. I think this is a little bit ahead. But yeah, this right here. Well, okay, two things. One is you have to look at how many analysts are predicting. For Nebius, it's actually fewer than CoreWeave, and there's just one that is estimated in 2028. So I don't know if this is right. I wouldn't read too much into the $5.16. And EPS, like revenue is very easy to predict on these. EPS is not. But they're going to be profitable in 2028, like almost for sure.
Yeah, I mean, I read this as like quarterly profitability, not full year, and like 2027 is for both of them for a quarter.
Okay,
But
let me pull up quarters.
I mean, yeah, like
So yeah, the consensus puts it at March. Interesting, March of 2027, with a big drop. That's interesting, huh? Yeah, that would be earlier than I would have expected, but maybe. Is there anything that, like, Nebius better than I do? Is there anything that leads you to think that that might be right? That the first quarter there in March is going to be profitable?
maybe, yeah, I'm not sure. Maybe some build out of the big like servicing of the big hyperscalers, but like we also don't know what their capex is going to be and like what their spend is going to be at all for 2027 either. So
Yeah.
yeah,
Yeah,
my
there's
I'm not thinking too deeply into it, Roy. Like 2027, I think they're going to have reached sufficient scale with their build out that they can lean into profitability if that's their desire. Now, if they want to invest more into the business to keep building out even further, then that's fine. I think that's a trade off that any investor in Nebius would make. But 2027 is like how I'm ballparking it in my head. All right. Have you guys heard about concept of software factory? I just came back from a huge AI conference in SF, and now that's a buzzing term where an AI will produce software continuously using proprietary data.
Yeah, I responded to certified. This is something I've heard of as far as a concept. I've not heard it called this, but it makes sense. If we have AI factories, why not software factories? It scares me a little bit, to be honest. Well, a couple of quick thoughts there. For one, it's very good from what I understand. I'm not a coder. I talked to my younger brother, who very much is, and a number of other people that I know in the space. They seem to indicate, like, if you're an expert in the space, if you're a 10x engineer or better, you are going to be able to outdo as far as code, as far as efficiency, as far as design. But it does a great job, especially entry level. Of course, it expands what these expert coders are able to do. So that's an exciting thing. Now, the challenge is if this becomes a reality, all of a sudden you're looking at the potentiality that. So, well, actually, let me take a step back. Currently, the way that these companies are designed is oftentimes some of their key products have like a core developer that is the guy to go to if they run into some issues, they need something major done. And when that person is on vacation, nothing gets done or touched. Perhaps they've been there so long that they're the only one that understand the code. We might go into an environment, if this becomes a reality, that people just don't understand the code at all. That's a scary thing to me, Tevis.
Yeah. I mean, it's very easy to end up with a lot of slop and just a non-optimized code base if you let AI do all the coding without proper supervision and guardrails, which I'm sure a lot of companies are just doing right now. But you need a good process as for everything else.
He might have been thinking more as far as SaaS. Like that would be bearish some SaaS, but it just exacerbates the ones that are weak and vulnerable to AI even more. But there's also a lot of SaaS that really isn't. It's not going to replace proprietary data, for instance. It's not going to replace IL6 certification. It's not going to replace the familiarity. That's certainly an aspect. So yeah, I would just say it makes it more extreme.
Thoughts on bank earnings this week and CPI, PPI?
Yeah, Jamie Dimon's the one to pay attention to. It should be good. And again, banks know now how to handle rate hikes. I think they'll be conservative with guidance and numbers, so that might be the one thing that the market doesn't like. But that's the right approach when you're in an environment you don't know how many rate hikes are on the table. CPI and PPI, yeah, I have some concerns there.
When is that dropping? Is that tomorrow? No. When's that dropping? Next week?
I need to look.
Somebody in the chat will know.
Yeah. I'll let you guys in the chat. I thought one dropped later this week, and the other was like 2 weeks out.
Fantasy dinner party guest: 3 company CEOs and or founders dead or alive, and why?
Alex Karp. He seems like he'd be a fascinating guy to talk to. I've always wanted to meet him. Yeah, I think it would just be fun to interact with that guy. 3 company CEOs or founders. I mean, I don't know. Steve Jobs is hard to just say no to, And I already know Vlad, so I'm tempted to just say Vlad because like he is the coolest guy. He really is. Like not just as a CEO, but like he's fun to talk to. But I've already met him, so like I would have to pick somebody else. I
feel like we need to get Elon there.
Oh man, you're right. It's got to be Elon. I don't know why I was even thinking about it. Thank you.
Yeah, we got to get him in there.
Okay, so you're Elon. Who else?
I feel like I don't know, man. If I get Elon in there, I kind of want to get like Sam Altman just to witness the drama, and then get Zuck as the third one and just watch them all.
Oh man. Okay, yeah. That's a very different experience than what I would be expecting. So yeah, Tevis wants a food fight. That's right.
Just so Elon, you thought you could take Zuck in a cage match. Sam, what do you think? Who do you think wins? And just back up. Yeah, I don't know, man. I feel like there could be some interesting ones as well. Like, who is the founder of what's his name? The founder of McDonald's. Like, I feel like that guy would be an interesting guy to talk to. Serial entrepreneur, failed a whole bunch of businesses, and then just like found the right model and just kept tapping that same cheat code essentially.
Good movie too.
Good movie. Yeah. Yeah, I feel like we'll always lean tech heavy on our picks as opposed to.
Why would we pick anything else?
I mean,
no, it would be interesting with some of the other names. Yeah, I mean, like there's some going back a long, long time that would be really interesting to talk to as well.
Yeah,
Michael
just
Burry. He's not a CEO or founder, but
get
well, I
Carp
guess
and
he is of Science
Burry in there.
Capital. Yeah.
Get Carp and Burry in the same room and just have a nice chat. Yeah. Snap guy.
Jack Dorsey would actually be one of those, as long as he doesn't find out that I don't like, but like he would be fascinating to talk to, I think. So, and interact with. I bet he has some stories, dude.
Yeah, if we're doing ayahuasca at dinner, I'm sure. I'm sure he's a great guy. All right, let's move on. Wheeling question. I got assigned on a stock at an $84 strike price and I collected $6.86 in premium per contract. Is it better to write aggressive calls below my adjusted cost basis or monthly and collect $4.50?
I mean, it depends what your strategy is, what your goals are. If it's to sell covered calls as just a nice bonus on a stock that you want to own long term, be more conservative, obviously. If your goal is like, hey, I'm doing this as a willing strategy, it's all about collecting premiums. I don't really care about the stock price action. In a bull market, it usually makes sense to be more aggressive with covered calls, and out of the options that you put there, writing them, which I wouldn't personally do, but if this is your strategy, writing them below your adjusted cost basis isn't the craziest thing in the world.
I think I'm at that place where I'll only write it now on companies that I want to hold. And generally speaking, if there is a company that I want to get out of, I would probably only write it at my cost basis. So it really depends on how below your cost basis you currently are. Like, for example, VG, I bought VG and I've been writing covered calls on VG for the past 4 months now. And it's served me okay, but my cost basis is like $13.30, something like that. And, I sold VG calls way too soon because I sold them last week, but I sold them at $14 for the end of this month, right? And so I still don't want to breach my cost basis, although I probably could, and the premiums would cover the capital losses. But generally speaking, if there is allowance there, I would rather collect a smaller premium and write it at the money or at my cost basis or slightly higher. Now, if it's like the case of BMNR where I bought at $40 and it's trading at $15, I can't really do that because I won't collect anything. I can write covered calls for next year and I still won't collect anything. And if I want to get out, yeah, sure, I'll get out through covered calls. I'll write them at like $18 or $20 or something. But the idea is to not get caught in that position. And generally speaking, if it's a stock that I want to hold for the long term, like in my case, a Nebius or an Amazon or a Meta or something like that, then I'm fine. Even if it falls, for me to just go a little bit further out in time and still write it at my cost basis or slightly higher, or sell cash secured puts or buy so I can lower my cost basis. Any of these are strategies that you can use, but it's really difficult when the stock gets away from you and it's a stock that you don't want to end up holding. You just want it to collect the premiums. Like, that's a tricky position to be in.
By the way, going back to the CEO thing, while you were talking, and yes, I was listening, but I've changed my mind. It's going to be Elon Karp and Palmer Luckey.
Oh, that's a good one.
Yeah, that would be a fascinating conversation. Like, just to even like, I'd feel too dumb to say anything, but yeah.
Yeah.
You would put Palmer Luckey and Zuck and Elon Musk in. That'd be even more fireworks than Sam Altman. Maybe.
I'm thinking now. Yeah, I don't know. I'm not sure. I was thinking like even like somebody like Vitalik is super awkward that I'd want to be like, what does this guy think about? But
you could do the all awkward. So you have Zuckerberg, you have Vitalik, and I don't know who else you'd put in there. But
I don't even know if that's
Jensen's amazing.
Yeah, I don't even know if that's a dinner I'd attend with all like the anyways. But okay, let's continue here. Why would Trump care about the midterms? he cannot be selected in 2 years again.
Legacy and pride.
Well, also, isn't it like all the other people can lose their seats? And
Do you think he cares about that though?
no, but he's going to get
Only so much as it benefits him. But yeah,
yeah, he's going to get pressure from the cabinet and whatnot.
Yeah.
Looking at constant liquidations in the Korean stock exchange, should we take it as a signal for concern or an opportunity or neither? I'm thinking that.
Yeah.
But yeah, go for it, bro.
The Hynix debut has not gone well, and it's of course weighed on Korean investors who tend to be heavy in tech and also heavy in leverage. And yeah, it's a little bit concerning just because, I mean, it's not going to collapse the market or anything, but there's a lot of people where that can get hurt. And also the tech trade itself can suffer quite a bit if more margin calls are happening. But yeah, there's a lot happening there. Hopefully we don't find out, Raven, but yeah, I would say slight concern. More so than opportunity. Opportunity, obviously, long term. Like if there's names that you find at attractive prices and you want to hold them over the next 5 years, I think you're fine through this. This isn't going to stop the AI build out.
Yeah. I like this answer. He can't get anything passed if he loses the House and Senate, and he would face impeachment. Wouldn't be the first time.
Yeah.
Did you guys see the video? Alex Karp says Palantir undervalued. Yeah, what is he going to say?
That's interesting, actually. Well, no, I don't know if you remember, but after he DPO'd the company back in 2020, and then in 2021, fairly early, it was in that first half of the year, he had actually came out and he said that he thought the stock was overvalued. And he'd rather people were investing in this long term rather than short term speculation, which was overpriced. Stocks don't usually react well when the CEO says that they're overvalued. And yeah, that case in point, like the stock fell. A lot of people were mad. If I recall correctly, there was even like a lawsuit from shareholders towards him. So yeah, he's said this before, but no, I've not seen this video. It must be either a new thing or he's reaching back into 2021. But it wouldn't surprise me. Karp has targeted and said that next year, that they plan to grow at 100%. That's not U.S. commercial. That's across the board. They're already growing at 85%. And I need to look back there, but analyst expectations, I think, are for 45% revenue growth next year. So that's well north of it. Maybe they don't reach it. Maybe it's 80%, but that's still a lot of upside.
Yeah. Let's see. Chances of SoFi getting into S&P, 3 months, 6 months, 9 months.
I think the December one is more likely than not. So I'd say for this current one, maybe 15%, 20%. I think by the end of December, I'd say like 50, 55% maybe. So they'll technically get in next year with January's inclusion, but it'll be announced in December. 9 months out, yeah, I'd just say even higher. So I think if it doesn't happen this year, it's happening next year.
Oh,
I'd
yeah.
be very shocked.
For sure. But I think it's going to happen this
year.
Yeah. Where are we with the Clarity Act? Trump pushing to pass it on TS.
True Social.
Yeah.
Yeah.
He's pushing for it, but yeah, I mean, they have the August recess. I should make a video on this, honestly. They have a hearing, I think, on July 17th for it, if I remember correctly. I'll make a video on it.
Yeah.
For smaller accounts, do you feel like consolidation is a better bang for your buck, or learning and applying diversification strategies even early on is more important? I personally diversified more when I had a smaller account, and I really like my learning. If I could go back, was I would probably consolidate way heavier. It just feels scary. Like if you have a $50,000 account and you're like, oh, I'm in 2 stocks, 25 and 25, it feels really scary than if you have 50 grand in 10 stocks and you have 5 grand in each. It feels way more like, oh, I can lose 5 grand. This one can go to 0 and like it won't kill me. But at the same time, like you'll grow way faster if you consolidate and obviously, do your homework and consolidate in the ones that you're most bullish in. That's my thought, but of course, it depends on how you sleep at night. If you are like, "Hey, this is way too risky for me," then just diversify.
A diversification works when your goal is to protect your net worth. So once you've like, if you end up doing consolidation, you hit whatever that number is that's going to help you retire, or you're well on track. Start you at that point. Don't shift your goals, but instead shift your strategy so that your goal is more certain. That wide range of outcomes is very small. So, but I think when you have a smaller account, it makes sense. I think it does for actually almost any person in almost any stage of life to concentrate according to your core convictions. Like if you have 20 stocks and you think 10 of them will be pretty good and will slightly beat the index fund, that doesn't sound very compelling. And let's say maybe you have six that you think will probably beat it by a decent clip, maybe and outperform it by 5 to 10% a year. Then you have three stocks that you're like, hey, these are just easy. Like they're basically guaranteed revenue. They're well within my risk comfort. I don't see how over 5 years I lose money on these. And then you have one where you're like, this is a generational opportunity. Why would you be like, hey, I'm going to invest 5% across the board in each of these? That doesn't make any sense at all. Now, you do want to. There is a time for consolidation. I would be careful unless you're talking about like you're really small, like you have $1,000 in the market, you're brand new, you have money coming in all the time. Maybe just one stock then, but I would say probably pick your top 3 to 5 favorites if you have a small account, and then don't make them equal across the board. I think that's a mistake. But if you have that one that's that's like my air test systems at the beginning of the year, where I'm like, hey, this is a screaming buy, or Palantir back in 2022, or Robinhood in 2023, or how I feel about CoreWeave now. Put a good chunk of money in there, whatever, like Tevis said, allows you to sleep at night. But yeah, don't as your account grows in size, it makes sense to be a little bit more conservative as you're starting to hit those goals.
Yeah. Should I blow $200 and get everything I can out of Fable for a week? Would love to get a whole bunch of research reports. Yeah, I mean, look, if you think the value that you're going to get is exceeding $200, then go for it. Do I still have a Nebius year-end price target of 350? Yes, that is still very much the price target. If you could only hold 5 stocks, what would they be? Let's assume forever. If it's forever, then it's going to be hyperscalers for me. Meta.
Yeah. That's tougher if it's forever.
Yeah, let's just say forever. I'm going to go with Meta, Amazon, SPY, QQQ.
No, stocks, not ETFs.
All right, fine.
While you're working on that, Palantir and Nvidia for sure for me. Just
you would hold them forever,
and Robinhood, yeah,
forever.
Palantir and Robinhood for sure. Nvidia, I think so, even though it is cyclical. Like I've just seen how they've executed.
Yeah, I'd hold Nvidia forever.
Microsoft is tempting, but I think I'd go Amazon actually. I don't see how that's not going to be good down the road.
Yeah, like
honestly, Walmart might be number 5 for me.
Wow.
And I'm not looking to make a position like in 2023. I thought about it, but yeah, if it's a forever, that's a really long time. And is Walmart going to be around in 2030? I think 5 years ago you could question it. Now they've done very well moving into the e-commerce space. They're starting to get into a lot of other stuff that's generating revenue. So yeah, they're going to be good. With Walmart? No, this is forever. I think Steve would be okay with it forever.
Yeah,
not SoFi forever.
I would definitely have Google in there, I think.
Yeah. I don't hate that at all. It's hard to go much out of the Mag 7.
Yeah, like I don't know if I want to hold a $10 billion company forever. Like that's scary to me. You can make a ton of money, but at the same time, it's just like, guys, if it's forever and I literally can't get out of these, I would rather hold, 5 things that I know are not going to go to zero or at all. What?
Raven has a good one there. SpaceX. The valuation, which is stretch, even though it's at basically an all-time low, uh, just because of the IPO factor. Forever is a long time, Tevis. Space is a big TAM. It's hard to look at. You don't. Your thought process has to shift away from valuation because to TAM and execution. SpaceX is not a bad pick. Tesla, even. I mean, I would go SpaceX over Tesla, though, although they're probably going to be one company, so it doesn't really matter.
Yeah, you open up the slot. Yeah, that's fine. Whatever floats your boat. Yeah, the only correct answer is S&P 500 for forever.
Yeah, but individual stocks. Yeah, but no, that is a correct.
Honestly, man, I think I'm getting at that point, Roy, where like I think every trade, like every successful trade that I make, everything that I make money on, I kind of want to take a 20% tax and just buy SPY with it, or take 50% tax and just buy SPY with it. And over time, build a SPY position that's my biggest position. Because right now it's like, okay, well, I trimmed some Nebius and I locked in a very healthy, gain on Nebius, and I rotated that into other stuff like ServiceNow and Amazon and all this other stuff. And I'm just like, that's great. But I think if I force myself for every sale that I make to have a 50% tax on myself and put that 50% of the SPY over time, I feel like SPY is going to be my number one position. And I can use that as a form of wealth preservation as the portfolio continues to get larger. I've never really thought about ETFs until now, but right now it's consuming more and more of my thoughts because I'm getting more into that like wealth preservation aspect where I want to consolidate, don't get me wrong, and I want to continue to, take big bets, but I want to do it from a position of like not the entire portfolio.
Yeah, what's been working well for me, and I actually started out this way. I've had some investments since I was 13, and that's all just in boring ETFs, and I look at it maybe twice a year, maybe, and I don't even like manage it. I have a broker that does that. It's just easy and then that's been the bedrock of if my entire rest of my account goes to zero, I still have retirement. It won't be like elaborate or anything, but that's okay. And like I would suggest for you beginning to do that, like shifting some over just to boring stuff that probably in a separate app or account that you don't even look at, that maybe like once or twice a year. And you just do that either automatically or when you get to certain levels, you take some and you put it in there and just slowly build that out and forget that it exists. And that's your insurance. So that if you end up, well, this way it enables you to take those bigger bets. So if you have that's going to be there and help you retire, then whatever you have left, you can be more aggressive with. And that's why I was able to do things like in 2022 to hyper concentrate on Palantir at 90% of my allocation because it wasn't really 90%. It was 90% of what I'm personally managing.
Yeah, I mean, I think the added benefit is also that you can run the wheel on SPY and the Qs and feel zero, zero, like regret about it. If you get your shares called away, you can just get right back in. And so I really, I don't know, I'm thinking about it more and more. And yeah, it's not about, I'm 32, but it's not about like, oh, how old are you? It's just like if your portfolio gets to that size where you get shaky around, if I lose half of this, I'm going to be set back quite a bit. Like you can be 21 and still think about this.
Yep, exactly.
The timing on my ServiceNow purchase is looking pretty good. Yeah, the only regret I have, to quote the Wolf of Wall Street, is that I didn't buy more. Because I'm really liking ServiceNow going into the earnings. Of course, it was up today. It's about $111. I bought it about $90, $95, something like that. It's not like crazy money, but yeah, that's what I've been buying over the past few weeks, along with Amazon, which has been doing well. And honestly, I when I bought ServiceNow on Amazon, Roy, and I trimmed some Nebius, I sent you a DM about it, and like the next day, like Nebius had a run, and both of these stocks were down. I was like, oh man, this sucks. But in the weeks following that, ServiceNow is up like 15%. Amazon is up about the same, and Nebius is down significantly from where I trimmed it. And so I felt like really, really validated in that decision because it just makes me a little bit more calm. I want to say, like my portfolio was down today, but it was only down like 1.5% or something, along with the covered calls and the cash secured puts and all that other stuff. Um, it really balanced out having the Meta and the Amazon and the ServiceNow. That the fact that Nebius might have been down 4 or 5%, my portfolio was down like 1.5. So, anyways, what do we think about Zeta?
Good company, good opportunity, not good enough for me to invest in.
Yeah. Which one do we think has a more upside 2 years from now at current prices, Nebius or CoreWeave?
CoreWeave, easily. Well, I wouldn't say easily, but CoreWeave. 3 years, I think you have an argument for Nebius. I would actually probably lean Nebius, but it's not a... Not for sure.
I would say CoreWeave as well. From $83, I think it's an easier road upwards. If you guys use LLMs to help with due diligence on companies, what's one of your favorite or most useful things to ask it to do for you?
So what I like to do, not just for my due diligence, but just in my business that I'm a part of, and just my own personal research too, is create a credible counter argument. So I'll use this, instead of like if I can't find somebody knowledgeable in this space to pick their brains at. Sometimes I do, and they're bullish like I am. And we bulls can all have blind spots. I want to know what those are as I'm beginning to go further than just entry stuff. So I'll oftentimes use this. Actually, I'll show one real quick. Well, it is an LLM thing, but okay. Let me throw this up too, since I mentioned physical AI. This is really this I use all the time. Within this tool, they have this research piece right here, and I know there's other things that you can do this with, but I'm just showing you an example. They have the Morningstar. But you can also go here for a AI generated report, and other platforms also have this as well. But this one I think is by far the most comprehensive, like even showing revenue long-term revisions, bulls say, bears say, and it's just when I know very little about a company, I'll start here. And then as I get a little bit further along, I will do my own research. I'm not going to just lean on that, but that's a starting point to see if I want to do more. When I feel like I have the bull argument, I will state that to the LLM and say, hey, this is a company I'm looking at investing in. This is what I'm seeing as opportunities. And if I know some of the bear cases, I'll also note those as well, but why I think that those are flawed. And then I'll basically ask it to present a steel man argument. So I don't want like the weakest possible straw man stuff out there on the other side and pushing back on my position, but also not being so obdurate that it's unwilling to change its mind when presented with strong evidence. And so I'll go from there. And I'll usually do that with ChatGPT. Usually it's really good with words. And then I'll do that with one other model with specific bear arguments that it brought to my light that I don't know enough about, just to make sure that this LLM didn't have a blind spot. So that's probably the number one, beyond that just initial surge of research that I use. That I like to do because I when I'm investing, at least personally, I don't want to just know the bull case and catalysts. I want to also know what's on the other side too. That's how I get to the risk reward.
Yeah, the only thing I'd add is like I also can't stress highly enough the Steelman method, where I'll just say, hey, look, this is my intention. This is what I want to do. And this is what I'm thinking about. Let's have a discussion and try to poke holes into my rationale. And if there's something that's a gap in my knowledge, like let's fill that gap. And so it's more of a conversation with the LLM as opposed to just using it as a research assistant.
Great minds think alike.
Yeah. Okay, we have about 10 minutes left, and we have 22 questions because you guys keep asking them. So let's run through them, Roy.
Yeah.
What are your thoughts on high income covered call ETFs like QQQI, BTCI, and NEHI, primarily for retirement accounts?
I don't know those specifically. I would have to look at their strategy. There's some strategies I think that are pretty good. Like if this is more of like the yield max model, I would be careful there. But if your goal is income, like JEPI and JEPQ, I think would be my favorite in the space. But yeah,
Yeah, I also like JEPI and JEPQ. I don't know why you would buy like the SPY over a JEPI, but I'm sure that you give it up in terms of lower performance. Like there is a catch there as well. But or I can just write covered calls my own. But yeah, I think they're a good vehicle. You just have to do your research, and also on the management fees. If you had to make a guess, when does the compute shortage end? In the 2030s.
10 years from now.
Yeah. If you had 1,000 to start a Roth IRA, what stock would you buy? It's not about what stock you buy. You're not going to get a silver bullet at $1,000 that changes your life. It's about the habits that you build along the way. So I couldn't care less what you buy as long as you make a habit to like, hey, every paycheck I'm going to put in $200, because what happens is, after 2 months worth of paychecks, you've doubled your account. No stock can give you well, I mean, it's very rare for you to find a stock that's just going to double for you every 2 months. So
Palantir back in the day, but yeah.
all right. I'm trying to teach people good.
No, you're right. Like that's the thing is with the small amount of money when you're new, you want to be making mistakes. Like not intentionally, but try out things, figure out what strategy works well for you, and develop then disciplined habits. Don't get reckless that you will repeat and actually hone and improve on when you actually have a sizable account. It actually means something.
Yeah. Anyone looking to Zeta here? It's my third largest position. Been DCing now for around 6 months. We'll continue to DC at these prices. Yeah, like we said with Zeta, we're both bullish on it. We think it's going to do well. Wish Zeta people all the best of luck. I don't think either of us are going to invest in Zeta anytime soon.
Yeah.
What's your go-to snack? Would you both eat one piece of it live when SoFi finally gets out of the bag holders club?
Man, my go-to snack just kind of rotates between a lot of things. I really like sour and salty more than sweet, but so like recently it's been salt and vinegar potato chips. They're just delicious. So, but yeah, pickles. I love pickles.
Pickles are good.
Salt. Actually, right. I take it back. Right now, salsa is so good. Salsa and chips.
That's good. Yeah. I mean, I'll take the other end of that. I'll take the sweet side. Some nice, like a nice Kit Kat or a coffee crisp. Oh, baby, I could do for a coffee crisp. Those are great. Rice Krispies, always a good time. Yeah. Anything chocolate, Lisa says. I agree with that. Are we into trading cards? No. Roy?
No. Back in the day, Magic the Gathering, but that was forever ago.
Is Oracle getting close to a price you'd get interested in? It's qualified quite a bit.
Yeah. Yes. Yeah, it's interesting for sure. I think I would just prefer to own more CoreWeave, to be honest, or swing back into Nebius. But it is attractive here, I will say.
Are we doing a stock draft this year?
Maybe. The other thing we could think about too, Tevis, the other guys have their stock draft. It's around this time of year anyway. Maybe we wait towards the end of the year and we do one for the next year. And we could even maybe include some of the guys like Matt who have done the one if we wanted to.
I mean, we could also just get, Neil and we can't get Chris, but I'm sure we can find,
sure. Manuel's is kind of making a step back. So I don't know if he would want to again or not. Of course, he'd destroy us again, but although I think Chris won. Yeah. And Tanner, of course.
Yeah.
Well, Tanner was on the other panel. So
Tanner wasn't with us.
Wealthmatica would be fun. Nate.
Yeah, they would be fun. I think I'd be interested just to see what Manuel would pick, honestly. Oh, yeah. Just so I can steal those picks from my portfolio.
Writing it down. And when he says, "Oh man, I was going to pick that," writing that one down.
Yeah. Let's see. Suppose Trump announces boots on the ground and the market falls right back to March 30th prices. What would you do in your portfolio and where would you get the funds to do it? Great question.
I don't have cash, so I wouldn't be able to do anything about it, sadly, right now.
I'd probably do margin, honestly. Because like I'd have to pay the margin, which is what, like 4%, 5%. It's not like with the amount that you can get. I obviously wouldn't go ape into margin with my maximum buying power. I'd probably go like 30% of my buying power, and if it gets really bad, maybe 50% of my buying power. But I would just pay the margin off slowly and try to consolidate into some names, and and probably through cash secured puts. I wouldn't just outright buy the stock. I don't know, maybe a little bit of hedging too, like buy some VG or something. Rachel says YouTube plus Neil and Nate would be fun. I agree. Yeah, let's get that set up now that I'm back in the same time zone as you guys.
That would be cool.
Would you rather hold 1,000 shares of CoreWeave or 500 of CoreWeave and 1,000 shares of Iron at these prices? Iron, Roy, is under $40 a share.
Yeah, I had to look it up because I'm like, I knew it fell today. I didn't see where it settled. 38.98, which is crazy, down 8.71% of the year. I mean, some of the fall is deserved, frankly. Leadership and execution have been problems, but undeserved as far as a stock price. Iron should be trading higher. That said, I would just rather own more CoreWeave because CoreWeave has fallen as well. It's very attractive.
Yeah. I mean, fast forward several years, I don't think you could go wrong with either. But yeah, I'd rather just pick CoreWeave, honestly, even though Iron is pretty cheap here. Any thoughts why New traded 133 million shares today?
Yes. There was an announcement. It either came after hours or it came late on Friday. And Mexico had now approved Nubank's license. There was a different level to it. They've already been building out depositories. They've been doing a lot of things in Mexico, but this was the big approval that they're waiting on. I don't remember the name of the license, but look that up. You'll see news over the weekend that filtered in from that. So I think it's mostly related to that. Mondays can have a little bit more volume as well. There might be something else, but that's the big piece.
Yes. We're coming up on time here. Have either of you been selling covered calls on Nebius and CoreWeave? Yes, I have been selling them on Nebius for sure.
I'm careful on it, but the premiums are very attractive, and I'm not doing poor man's covered calls. So worst case scenario, my shares get blown away. I made some money on them, and my leaps are just printing. So I'm okay with that.
Do SoFi executives still have stock-based comp? No, that ended in June. They haven't done a new one yet.
Yeah, I was a little bit surprised that they didn't announce something right around, but they may. Honestly, if I were them, you might wait until like closer to the end of the year. Hopefully, the stock price is a little higher, and that'll be received a little better. But they are going to likely do this again. It shouldn't be a surprise to us. And it likely will be tied to performance or maybe stock performance as well. As long as shareholder incentives are aligned, I'm happy.
Yep. Do I have an RSP? Yes, I do. Does AIR have positive EPS tomorrow?
It might. It's hard to say. I don't think it's a guarantee. The market's not expecting it. Yeah, but it could.
CPI hot or cool tomorrow? Hot.
Probably hot.
Who is this guy? What happened to Degen? I'm growing up, man. What do you want? I sold a Nebius $400 strike January 2027 call for 7,000 premium when it was at 280. Should I close or let it ride?
That's insane.
I mean,
400 is a lot.
Yeah.
I would, me personally, my situation, I would let it ride.
Yeah, it depends on what your goals are, man. Like if you're okay selling at 400, sell at 400 and hold it. You could also just buy a Nebius leap with that premium, and then you'll be fine either way.
I like that.
There's a lot you can do. It just depends on whatever you want to do. Do you have a subscription to all the LLMs that you use? I have Gemini, I have Claude that I pay for, and that's pretty much it.
Yeah, I have the Perplexity subscription and ChatGPT, so that's it. And Grok, I guess. Yeah, Grok's actually gotten better. I'm very pleased.
Yeah, Celsius to Monster. Yeah, I mean, whatever's in front of me in the store, I'll buy.
Commodity.
Commoditized. What would be a good price to get into DRAM? You guys buying? We're not, but you're right.
Yeah, no, I prefer individual names, but yeah, that I've not thought of it with the ETF. It is interesting. So,
okay. Biggest stock investment mistake.
not buying Rocket Lab at 7 when I saw the thesis and I wanted to buy.
I think the last time we got asked. Price. Yeah, I think the last time we got asked this, I said buying BMNR, so I'll just stick with that. CoreWeave leadership is all finance guys, not technical. What's your view?
It's the right strategy. If you look at, and I wouldn't say all, but yeah, there's a lot of finance guys on there. They're using a model that's very, very well understood in finance. That's all tied to debt issuance with take or pay contracts. And that is what is enabling them to build at this size and scale. They're also very, very good with the supply chain logistics. The build out is going very well for CoreWeave. So I would say I'm not very concerned. Plus, like their main push has been bare metal. If they were building a neo cloud, I would like to see a lot more engineering talent on there, but that's not their goal.
What's going on in the Middle East? Is there an oil stock you would swing on? BG. We're officially over 2 hours, guys. I don't know. You want to give them a couple more minutes, or what do you think?
We can finish out the questions. Yeah, a few more minutes.
I won't bookmark anymore, but we'll finish this out. What percentage of your account do you leave for speculative trades like pure call put options? I don't have a set percentage. I just generally ballpark it depending on my conviction, but I'll only write, speculative trades, under 5% usually. Like for tickers that are not core tickers, usually under 5%. Sometimes it goes to 6 or 7, but yeah.
Yep, agreed.
Do you guys like those pickled eggs or pickled sausage like they're in a red video? Yeah, I love those.
Yeah. I've not had the sausage. I'm sure that's great. The eggs are great.
Mm-hmm. I'm getting a lot of questions from recent college grads at my gym. They're looking for jobs. Can you offer any advice I can pass to them to help them get the job? Learn transferable skills, use AI to help you build something yourself. It's probably the best I can do.
Yeah, I think every company or almost every company is going to ask the AI question. It's become more important than what used to be a very important question for a lot of businesses is if you're bilingual or not. AI familiarization is going to tell them a lot as far as like if you're a builder engineer, how you use it. But even if you're not, like that's one of the things where if you're not, you're like, oh, I'm an English tutor and you're looking for that kind of job for whatever reason, you're going to get asked about AI. So be prepared to answer that question.
Yeah. And look, what I cannot understate the importance of building something yourself. It can be a simple tool. It can be, something super practical. It can be something you can turn into your own business if you choose to do so. But or even just for an interview process, but just building something yourself, I think is very important for you to have hands-on experience and showcase your skills in a way that's not just theoretical. Do you think CoreWeave has fallen because of dilution?
Probably more so debt and competition fears. Overstated, but those are the primary reasons in my mind.
I started trading options because of you guys, and boy, is it fun. Have you seen covered calls on SMH? They're absolutely insane. Yeah, I mean, I would say like that's not even a risky one to do it on. So
yeah. Look at Nebius is a good one to look at. Air when it's really flying, boy. Look at some volatile names that have really been moving, and you'll see ridiculous. But also be careful. Never chase the premium. focus on the ticker. So if you see something you're like, I love owning this, I love wheeling it, whatever it is, do that. Don't be like, oh, this really speculative stock that I'd never heard of has really good premiums. That's a mistake.
Mm-hmm. Thoughts on USA cannabis companies on the NYSE? TRLV and Glass recently allowed on NFC because segregated only to medical. Yeah, and I mean, I sort of went through this hype cycle with Canada's approval. Nah, I'm not really interested.
Yeah, same.
Psychedelics were like at some point really, popular from an investment case perspective, and I don't hear more about them. Like I think like I'm also just less and less interested in crypto overall because I think AI being the darling of the market at this point has just sucked out all the oxygen for everything else. Um, and all the capital is flowing there. So I think it's going to continue to be like that for a while. Like it's going to be the most exciting narrative or the most exciting um, vertical in the market for the next little while for sure.
Yeah.
I'm not really looking to diversify too much away from that. And finally, Blake asks, "Did you see the guy who got hit by the bison?" Yeah, he just got fully yeeted, like fully into the air. Did you see
see
that?
it? So, but he
didn't
said buffalo, not bison. No, I just kidding.
Well, you, my friend, are going to see this right now because we're going to end our show with it. Let me turn off the volume there, and here we go. So yeah, I mean, we won't do any volume. We'll just fast forward a bit. Homeboy runs, nothing, runs, and it is right here. I don't know why he's standing there. It's like, dude, just run away. At this moment,
he might think he can hide the trees, but yeah, I don't know.
He realized
Oh goodness.
Just
Hope
fully
he's okay. Yeah, I've been charged by a moose twice, and they're big animals. So one time it was a calf, but the other time it was a bull, and that was a scary thing. So feel for that
those
guy.
things are like 2,000 pounds. So yikes. Yeah, get behind the tree. Future's down quite a bit. Maybe we should have hedged already.
Yeah, maybe.
TBD. All right. This is 2 hours and 7 minutes for the stream. So hopefully that makes up for us being slightly late on this one. Really appreciate you guys all being here, supporting the channels, and spending your Monday evenings with us. This is the Bootleg Weekly. We will see you again on Friday for Fiesta Friday. Have fun out there. Have a good week and see you soon. Good night.